Hello and welcome to MF Corner. I'm Sonal Bhutra. With me as always is Vinny Motiwala, and today we'll put spotlight on consumption-oriented funds. Has the money moved to consumption from Capex theme? Before we get started with the discussion, you have some interesting data.
Absolutely, Sonal. And you know what we've been seeing over the last few years, that Capex was that story, right? The push that came in from the government. Now our point is that now will we see consumption coming into play, given that there are so many impetuses that are coming in from the government side, and a GST, that is a possibility that comes in that would benefit consumption. Now let's look at what's happened in the past, right? Nifty consumption in terms of a performance in the last 6 months and 1 year, we've seen overall the performance that we're seeing on a total basis is for Nifty consumption 18% up. While long-term average for that was around 6.8% in the last couple of decades. Similarly, when you're looking at it in terms of the move that's coming from FII and DII, and this was a data point that, Feroz also has mentioned today, that is in terms of last 2 quarters when you're looking at it, FIIs, their holdings have moderated coming in consumption. Now, overall, DIIs, they're particularly continuing to be buyers. We've seen that trend go on as well. Now, in terms of funds also, a lot of increase that has come in terms of the number of funds that are there for consumption-related funds as well. Currently, there are almost 20-odd active consumption funds that we're watching out for, with almost 41.3 thousand crores that is there in terms of AUM over there. Capex story. Now, on the other hand, when you're looking at Capex, the growth in the last 6 months for Capex and returns has been, Nifty Infra is what we're talking about, has been at 16%. So, obviously, consumption has started doing better, specifically in the last 6 months. Now, obviously, in terms of FIIs, again, FIIs overall also have been selling in Indian market and in Nifty Infra also, and overall infra stocks, they've seen a reduction coming in there. DIIs continue to be buyers. Now, key to watch out for is going to be that when you're looking at it, and this is the data that I've picked out from Value Research, that the top performers that in terms of these funds, consumption funds and Capex and infra funds, when you're looking at consumption funds, we're just comparing the top performers. Kotak as well as HSBC managed to see good returns in the last 1 year of 3%. Versus, why good I'm saying, because versus when you're saying infra funds, that is ICICI Pru Infra, which was among the top performers, as well as Canara Robeco, those have seen negative returns, and these were the best performers. So you look at it in terms of the move that has come in as well, clearly seems like, maybe there is going to be some shift that one is seeing coming in from Capex to consumption, given that we are watching out for a lot of points coming in over there. Now, let's bring on board our guests for today. We have Feroz Aziz joining in with us, as well as Tarun Birani. Feroz, as well as Tarun, good afternoon, and thank you so much for joining us. Feroz, I want to start by talking about the consumption versus Capex funds. How have they performed? We've given some data points on that front as well. Past performance in terms of AUM growth, and now what are we watching out for here in both these stories? Afternoon.
Good afternoon, Winnie. Like you were actually throwing out very, very interesting pieces of information and data. I just want to take a step back and explain to the viewer what is consumption. What happens is, I was over the weekend hearing a couple of oncologists talk to each other, and it sounded so much like Greek and Latin that I got intimidated. So let me first break it down into consumption. What is consumption and what constitutes consumption as a theme? Because it's second nature for us in the industry, but for an outsider, it looks a little more intimidating. So consumption is any kind of a sector which directly supplies to households or individuals. B2C businesses are largely consumption. There, if you have to actually narrow it down to subsectors, 6 subsectors: FMCG, auto, apparels, telecom, travel and tourism, and healthcare. These are the 6 subsectors one has to remember, because all of them actually are directly supplying their goods or services to a consumer, end consumer, and those are not B2B businesses. For example, IT is largely B2B, a business supplying to another business in India or globally. So that's consumption, and 6 subsectors constitute consumption. Now coming to how the AUM of these consumption funds have moved, it has not moved dramatically. Of course, in percentage terms, it has moved reasonably because from 11,000 crores post-COVID in FY21 to where we are at 35,000 crores, that's almost 3 times. I think the number of schemes have definitely more than doubled from 13 to 27. That's a large shift. What is happening is, in the asset management industry, in 2018, SEBI clamped down on the number of schemes an asset management company can have in several categories. It cannot have 2 large cap funds, it can't have 2 mid cap, but this thematic category, you can make anything a theme, right? A theme of MNC companies, theme of four sectors could combine to make themes. So what asset management companies started doing is looking for themes to expand their product bouquet, which is the right thing to do from their perspective. But consumption number of funds went up from 13 to 27 because the rest of the conventional sector categories had a limitation of launching new NFOs. And I think consumption, the good part, Vinny, is consumption has still not rallied. Like the performances you showed, that's very interesting. Generally, when consumption, a theme becomes popular, the performance is behind us. That's the unique thing on the timing of the show. I really respect that because it's not that the performance is stupendous and then we are saying consumption is a good theme to look at.
Okay, all right. So we'll watch out for what kind of returns we see from here on. Now, as you pointed out, there's still a lot of steam left, and we've just started talking about what possible triggers could come by for the consumption theme overall. Tarun, let me get you in the conversation as well. Given the deceleration we are seeing in Capex growth, and we're seeing renewed policy support for consumer sectors, would you suggest it is now prudent time for average investors to reallocate some of their holdings from Capex to consumption themes?
Right. So good afternoon. I think Firoz did touched upon a lot of pointers, but I think couple of things which I want to talk about specific to the question is 2025 union budget. I think it reduced the allocation to Capex from 11 lakh crores to 10 lakh crores. Some data points I'm sharing. And we have seen a 1 lakh crore of tax benefit given to and I think that is going to spur the consumption. That was one thing. And you have seen sectors like FMCG, auto, all these retail and consumption, all these consumer section has got a lot of positive outlook after that. Again, we are witnessing a very subtle as well as meaningful shift in the India's growth narrative as I see right now. The Capex momentum, while very strong, is tapering to my mind right now. The gross fixed capital formation is down, which used to be in double digit, is at 7%. But the private consumption, as we talk, is growing at 7.2% growth rate in FY25. And this quarter also, the growth has been very strong. So I think the consumption theme from that point of view look very strong. But I feel the real thing is coming is from the upcoming GST overall, where we are going to see two rates of 5% and 18%. And I see a lot of revival of a lot of sectors like auto, electronics, white goods. All these things will get a lot of push, and the stimulus is calculated at around 1.9 lakh crores, which is like 0.6 to 0.7% of the GDP. To my mind, this is going to really make things much stronger for consumption. Again, India is if you look at India, is a 60% is a consumption economy. The GDP constitutes 60% of consumption, and we are growing at 7%. So I think we are the fifth largest consumption market. Again, the tailwind plus from a sustainability looks very strong because we have themes like premiumization. Everybody is moving to upper grade. Urbanization, we are talking about digital adoption, we are talking about formalization. Again, most of the like jewelry sector, it is formalizing. So all these things are going very strong, but at the same time, I'm not a very strong believer of sectoral funds. I feel one should look at flexi, multi-cap or a diversified category because themes keep changing. And I feel from a long point of view, a structure is more important rather than going sectoral.
Absolutely. A structure is more important than sectoral is what you believe is the best way to go forward. Feroz, would you like to come in on that front, right? What if someone is actually holding some Capex funds? Is it time maybe to redeem that and invest that money coming into consumption funds? Is that a story that one should watch out for? And are there any other economic indicators that one should keep an eye out on as a mutual fund investor to, maybe participate in this theme?
Capital expenditure or Capex, capital expansion also. What is it? It's nothing but any sector which benefits from large-scale investments, in which there are three things. One is manufacturing, infrastructure, and maybe some degree of energy. So these are capital expansion beneficiaries in terms of subsectors. In energy, you have so many other sectors, subsectors. So to get to your point, whether if somebody is holding a capex theme as a fund, does he need to move out? To my mind, the answer is no, not so much. The shift of capital from capex to consumption is not apparent to naked eye. If you look at the top 10 stocks in both these sectors, both these themes largely, in NSE 500, there are about 6 stocks in consumption where FIIs have sold out of the 10. Domestic institutions have gone lighter in 3 out of the 10, like especially the auto. So point I'm trying to get to is there's the flight of capital between these two sectors has not been so apparent over the last couple of quarters. Now, in the capital goods or capital expansion theme, if you look at the top 10 stocks, the number of stocks which FIIs reduced their ownership in terms of free float ownership, you again see 6 stocks where they have actually gone lighter. And DIIs have also gone lighter in 4 out of the 10 stocks. So the flight of capital is still not apparent to naked eye. So if you're sitting on a capex theme fund, that implies, like you, Vinny, rightly pointed out, they've not made money last year. So will I wait for the turnaround? The answer is yes. Capital formation happens from 3 sources. One is household capital formation, private corporate capital formation, and public sector corporate formation, capital formation. The public sector capital formation has seen a 12% capital expenditure from government side in budgets 4 years back to 22% today. But in the private corporate side, there was 5.5 lakh trillion rupees of capital formation that came down to 4.97 lakhs. So that's one thing which should revive because of several counts. One is GST rationalization, the other is the rate cut, which we've been waiting for 2 years, and finally it came in this calendar year. You also see a lot of new credit offtake. There is so much financialization happening, like Tarun Saab also said. That's the third thing. And the fourth, household consumption will also get a push. Because of the new tax regime. So to answer your pointed questions, don't panic if you have a capex theme. It might not be the largest, strongest narrative. Play the contra play. You've not lost too much or made too much last 1 year. You've almost done as much as Nifty. But I would not panic because capital expansion will happen in the private side, and that will take forward the capital formation over the next couple of years.
Got it. So Tarun, in that case, how do you think should investors balance cyclicality and valuation risk between capex and consumption funds if there is a diversified portfolio and they're planning to do this in the coming year itself?
Right. So my strong suggestion is 90% of your return comes from asset allocation. Again, the sectoral play, the stock picking skills, all these things doesn't add up to the long-term returns. Long-term returns comes because of the structure and the asset allocation. And anybody who is focusing on that part, I think will be able to benefit from that. To your specific question between cyclicity and the valuation risk, what we are seeing between capex and consumption, I think investors should avoid aggressive sectoral bets. Instead, opt for diversified fund, look at flexi cap structures. Again, because there the fund managers has the ability to keep changing the stance based on the market environment. So I will be more comfortable looking at that because it limits the combined exposure to the consumption and capex theme, not more than 10 to 20%. Avoid chasing peaks. Again, a lot of time because of FOMO, just because it has gone up. So again, that need to be like, just look at the QSR theme, right? QSR is 3 lakh rupees, with Zomato and Swiggy put together have 3 lakh crore of market cap today. I think a lot of FOMO factor in the market. So I think we need to be mindful that whether we are looking at just investing or making long-term returns, that is more important. And again, preserve the capex exposure because I think capex is a long-term story for India and will continue to be positive.
Okay, point taken, Tarun. Preserve your capital capex exposure as well. Avoid chasing peaks. That's a word coming in there. But on that note, we're going to actually slip into a very short break. Don't go anywhere. We're going to be continuing this conversation after the break as well. Welcome back to MF Corner on CNBC TV 18. We still have with us Tarun Birani, founder of and CEO at TBNG Capital Advisors, as well as Feroz Aziz, joint CEO at Anand Rathi Wealth. We're discussing consumption funds. Are they going to see a pickup versus Capex funds? Is that story over? Tarun, you were talking about allocation coming in as well. I just want to understand the portfolio allocation strategy that you would suggest to an investor right now in this consumption story if they want to participate in that, as well as overall, what is the approach that they should have? Should it be more in terms of a phase managed approach or quickly shift allocations if that's the situation?
So if you ask me from a market perspective, I look at 3-4 parameter from a price to earning, price to book value, market cap to GDP, yield gap. I feel market is in a neutral zone. It's neither very expensive and neither very, very cheap, right, either. So from that perspective, I feel the current environment is not ripe for lump sum investment. The market is good for staggered investing, investing into small and mid caps through a longer staggered route, and looking and sectoral bets again through a long staggered route, and maybe large cap and flexi cap and multi assets are something which can be looked at from a lump sum perspective. So that is the approach. But again, from a allocation point of view, as I mentioned before, also I'm a very strong believer of diversification and diversified funds. I don't favor sectoral funds because I feel it brings a lot of tactical nature in the investing part. And the long-term compounding happens because of you staying on course with the investment, right? And investor doesn't have the wherewithal to change the portfolio time and again, right? So diversified is recommended, but again, nonetheless, for the ones who want to venture out and want to take risk, maybe core and satellite is the right approach, where the core part of the portfolio stays intact for a longer term, and the satellite portion is where maybe 10 to 20% you can look at building up the strategies which you are very bullish on. Like we are talking, it's a real theme for India. Next 10 years, yes, it's a decade opportunity. So one can play that.
Got it. So we are out of time, but I have to ask you this question because it helps the retail investors as well. Feroz, let me start with you. Which mutual fund categories or schemes are set to benefit the most? And do you see a sustainable outperformance for consumption funds from here on?
So, I'm sorry, but I would definitely want to comment on the asset allocation. I think India has only 6.7% of its money at household level, 940 lakh crores, only 6.7% is in equity, both mutual funds and direct equity. If asset allocation, we recommend 60, 70, 80% for long-term monies, India is nowhere close to that. So if you're not in equity, up to 70% for 5-year plus monies, which is very likely because we are talking to Indian viewers, please move your 70, 80% of your money to equity. Do it lump sum is my one thing which I disagree. Of course, asset allocation is very, very crucial. That's what I agree with Tarun. One thing is do lump sum because you've got a 1-year time correction, you've got a 6% price correction, you've got 11% earnings growth, and the stock Nifty is down 11 almost about 8% now from the peaks of last September. So you don't get too lucky. You get a 1-year time correction, do lump sum as long as you can tolerate 10-12% of market falls, which is what is the second age of the market. Coming to consumption, I think if there is a fund manager who's sharp in the consumption cycle, which is reasonably certain over the next 3 years, I wouldn't be surprised the Nifty consumption index beating Nifty by about 3 to 4% per annum for the next 3 years. If you're getting into this sector, be patient. It's just because you buy it, it will not start moving from tomorrow. So if you're ready to go into a sectorial or a thematic scheme, at least hold it for 3 years, especially if it's a theme and not a specific sector. And consumption is a very wide theme. Get a sharp fund manager so that he can move it around. Inside consumption, I had rattled out 6 different subsectors. So that's what I would give as a sharp reco to your viewers.
Okay, thanks for that. And Tarun, a quick word from you as well in terms of, mutual fund categories or schemes maybe that you are looking at in terms of our consumption story.
I would again recommend diversified funds which have the to pull up into the consumption funds, but there are a lot of ETFs, index funds tracking consumption, which are available at very low cost. That also could be looked at this point of time. There are a lot of satellite themes, a lot of active consumption funds also available in the market. So that again can be looked at. Yeah.
Okay, all right. Feroz and Tarun, always a pleasure speaking with the two of you. This time it was an interesting topic because we've been seeing that move. And as Feroz mentioned, usually the stocks run up and after that we see all the craze. But this time, this is not something that has happened. So we'll watch out for the moves that we'll see in this particular space as well. But with that, we are completely out of time on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.